Hello and welcome to Business Morning. I am Visi Adebayo. Oil prices are down today amid concerns that the nascent recovery in fuel demand could stall as a fresh wave of COVID-19 infections around the world sparks tighter lockdowns just as major producers ramp up output. Well, Brent crude futures were down 0.8% this morning to $43.78 a barrel, while US WTI futures were also down 0.7% to trade around $40.71 a barrel. Now, that slide comes after WTI rose 1.8% and Brent was up 1.5% on Monday on better than expected data on manufacturing activity in Asia, Europe, and the US, showing factories were emerging from the worst of the early coronavirus pandemic impact. A dent in fuel demand, cities from Manila to Melbourne are tightening lockdowns to battle new infections, while Norway has stopped cruise ship traffic in the latest European travel alarm. Back home, the new Chief Executive Officer of Seplat Petroleum Development Company, Mr. Roger Brown, has taken over the mantle of leadership and is expected to lead Seplat into the next phase of the company's growth aspirations following the retirement of the founding CEO, Austin Avuru. Now, the company recently marked its 10th anniversary in Lagos with an inaugural energy summit aimed at discussing business sustainability and energy transition. Let's see the report.
An energy summit is launched here today.
Rather than pop some wines, hold some colorful assembled reception and lavish ceremony, Seplat PLC, arguably Nigeria's most successful indigenous oil and gas company, is hosting this inaugural energy summit to celebrate its 10th anniversary.
To do this business and remain relevant and sustainable for the long term, we have to do it in such a way that the fossil fuel will be done in a cleaner way, and that's why the Seplat gas story is key. It's also very important for us to appreciate the impact of what the climate narrative is now doing to our business.
Themed Business Sustainability and Strategic Leadership in Africa, Seplat intends to add their voice through the business community globally, participate and contribute to the climate change narrative, environment safety and governance initiative in the business world. It's about global energy transition, climate change, global energy market, post-COVID, low crude oil production costs, corporate governance, renewable energy. The robust panelists scattered across the globe made spot-on contributions.
Fiscal sustainability in Africa will increase and improve. There will be positive for growth and wide acceptance of cleaner energy and renewable energy sources.
Part of the anniversary event is the handing over of baton from Austin Avuru, the outgoing CEO, to Roger Brown, the new CEO. He shows us part of the strengths of the company's success.
We really didn't have anything to learn from or copy from. We're not operating in an environment where you already see a lot of corporates where governance is taken for granted. So every time we looked over our shoulders, we're not seeing anybody to copy from. So we had to build internally and build all on our own and set examples and set the pace and set milestones for ourselves.
From 7 years on the saddle as the CFO, Roger now wears the cap. He will simply sustain the culture.
Please continue to support us through partnerships, through our 8 joint ventures we have, joint venture in ANO in the gas side, and give us your support in completing transactions and approvals and legislation that's very clear.
Among the consensus here is that sustainability will make you a darling to investors. Also, ensuring that the current energy mix is rejigged for a greater lean to renewables for an efficient energy transition. Olu Phillips, Channels Television News.
The Nigerian courier industry is one of the most troubled sectors of the Nigerian economy at this time. And prior to the COVID-19 pandemic, that sector had been grappling with a lot of challenges, including multiple taxation. The Nigerian Postal Service recently announced a cocktail of guidelines which included licensing fees and other regulations that seem geared towards restricting competition in the logistics value chain. But hours after that release, the Ministry of Communications and Digital Economy suspended the policy after the decision was greeted by backlash from operators and the general public. One of the private sector entities that has raised concerns over the regulation is the Lagos Chamber of Commerce and Industry that identified other fundamental regulatory issues beyond that of the licensing fees. But joining me now to speak to some of these concerns is the Vice President of the Association of Nigeria Courier Operators, Jumoke Imaswe. Good morning and thank you for coming on the program.
Good morning, Chinese.
I'm BC, actually.
Okay.
Well, all right, so let's begin the conversation now. Of course, since the Minister of Communications and Digital Economy suspended NIPO's recent policy, what has the logistics and the courier services atmosphere looked like? Have operators now regained their confidence?
Thank you for having me here. We have actually still been going through and discussing a lot of these policies. And it's not just us alone. We have another courier association, the International Air Courier Aviation as well, NIACA. And we both had to come together to drop a communique, which we have sent to the minister to take a look at it again. One of it is the 2% commission that NIPOS is demanding of all the courier companies. I mean, who does that? 2%. You don't even know if that courier company has even broken even in that particular year. And they're asking for 2% of the total earnings of that courier company. And don't forget that the economy isn't doing very well. And it is also affecting our sector as it is. And we also have so many taxations that we pay, levies, you know, either by the local government, by the state government, and now the federal government. So we're actually coming up, or we've come up with some, you know, suggestions to the ministry on the way forward for the sector.
But apart from the 2%, what other area of concerns?
Well, in one of the policies that was just signed by NIPOS is actually asking that courier companies cannot take on or deliver items of, you know, the annual reports, stuff like annual reports, share certificates, dividend warrants, and all of that. Things to do with the capital market. And we are looking at it like this is an economy that should be free. The customers have a right to choose who they want to ask to do their business for them.
Now, of course, is it a collective opinion that there should be no increase in licensing fees across the various class of operations, or is it just that the revised fees were too ambitious, as it were?
Well, over the years, ANCO has been in existence for the past 18 years. And we've worked, will I say, peacefully, in sync with NIPOS, because they have a department that regulates us, the Courier Regulatory Department, the CRD. And we've worked, you know, in harmony with them over these years. We actually pay a renewal fee of 352,500 naira every year to renew our license. And what I find so, or what Association and NIACA has found so troubling is the fact that there was a time that NIPOS actually had about 290 licensed courier companies in this country. As at April this year, they are down to 150.
And why is that?
And they haven't come up to ask the stakeholders, us, to say to us, what could be the challenges that you're having in the sector? What do you think could be, or what are the issues that is making companies to drop out of this particular sector and find some other means to survive? Rather than call us, let us, you know, have a round table discussion. Let us air what our challenges are that we are facing in the sector so they can formulate policies that will enable this sector to strive. They didn't do any of that. All we just saw was an increase in the renewal of our licenses every year. you can imagine for Nigerian courier operators, to obtain the license is 10 million, and then you do a 40% every year, which comes to 4 million naira as renewal fee every year. Some of our colleagues haven't even made that kind of money this year. I mean, talk less of giving that to the government. And that is outside the fact that there are so many other levies, you know, slammed on dispatch riders, by the local government, by the state government, and, you know, other taxes. You know, you pay your staff, LIRS, FIRS, and so many other levies and taxations.
So are levies and taxations the only reason why you've had, you know, people, your colleagues actually drop out of this business?
No. We've actually had a lot of challenges in terms of the fact that, you know, the economy is a reflection of how well organizations will strive. And as companies go down, there are really no more packages from those companies that have closed down. And then we also cannot take out the fact that technology has taken out a lot of, you know, people who ordinarily would want to send packages, you know, maybe a check from one organization to another. These days, what they just do is scan that copy, and the destination receives and is treated. So all of that has actually, you know, scaled down the volume that we normally will pick. And now that we have seen that, a lot of us have tried to go into logistics, haulage, and the rest. But we have so many, you know, unlicensed operators in that particular sector. If you go to Ido, for example, you just find, you know, lorries that are there ready to load and move from Lagos to any destination. They don't have anything at stake. They don't pay renewal license fee. They don't pay taxation. They don't pay all of these levies that we do.
But is anything being done to actually curb this?
That's why I said the two associations have actually come up together. In fact, especially after we saw these new guidelines by NIPOST to, you know, look at all of these issues and offer our own air our own views concerning it.
Now, let's still talk about the tech now. Tell us, what has the impact of the tech-oriented industry,
Okay.
I mean, talking about it now, what has the impact of NIPOST regulations actually had on some of the startups, the tech startup in the courier industry? For example, the likes of Max.ng, we have GoCarrier, and even Wayhailing, which recently suspended operations in Lagos.
Well, like we have always said, the market is big enough for everyone to strive in. And what we are actually just trying to do now is to get both associations getting these new operators so we can all regulate this sector a whole lot more professionally.
And talking about regulation obligations and the social services delivery voluntary requests from the service, it looks like operators are actually not so bothered about that, but instead want more clarity as to the definition of those clauses.
Well, if you look at, I mean, what the government is saying, if they had carried us along as stakeholders, and we feel like, oh, all the policies that is being set out is actually to see the growth of this industry. Of course, we will come out. There's nothing wrong in taking up social responsibilities. But when you feel that the government, the policies that they've set out to regulate us is actually anti-growth, there's no way you will want to feel like you have any obligation towards fulfilling such.
But one of the arguments that NIPOST will put up is the fact that the new regulations were meant to weed out bad eggs and improve consumer confidence in this sector.
How? Can I throw that back at you?
You tell us.
How? Because they have actually not taken us in. We are the ones, I mean, there's a parable that says, it's he who wears the shoes that knows where it pinches. They haven't called us to ask, what are the issues? What are the challenges? So how would they just sit in the comfort of their office and draw up this for us? There are so many ways that you can wield out, the unprofessional people, which is exactly what the associations are actually trying to do. You need us to wield away the unprofessional operators in the sector.
And what are some
There's
of the
no way
ways?
you
What are
can
some of
do
the
that.
ways that this could be done?
Well, we had actually been talking with them prior to these guidelines that we need them to register, and not just register, a whole lot of investigation needs to be put into it. Where are their offices? How experienced are they? What kind of security can they profile? Before we can allow them or entrust customers to take a package from origin to destination.
But how do we enforce all of this?
We, like I just said, we have actually been, we've worked out all of these modalities, how we want them to be registered. They must have an office that can be visited. They must have a certain number of staff. They must have a certain number of, machinery and all of that put in place for us to feel that, yes, they can actually do the work professionally and well.
If your members were to sit with NIPOS now as an association, would you call for a total overhaul of the Postal Service Act, that operations should be left status quo?
Well, the thing is, NIPOS is our regulator, and they're also a player. So it becomes pretty difficult when you have somebody who has dual role, the player and the regulator. So what we actually, and we have been advocating for, is the Postal Bill Commission. About 2-3 years ago, we actually had a hearing at the Senate, and a couple of things we adjusted in the postal bill. So we believe that if that postal bill is passed into law, it will give us an independent regulator, which will also in turn regulate the NIPOS themselves. So that gives us a fair, equal playing ground. So if we can actually push for the Postal Bill Commission and, is actualized, I'm sure a couple of these things will find their level.
But we would also like to know how your members are actually coping with other regulatory headwinds at the state levels. For instance, the vehicle inspection permits, coping with extortions from some law enforcement agents and the rest.
Yeah, I think about, was it 2 weeks ago or so, the dispatch riders of various companies actually threatened to go on strike. And why is that? Just what you just said about levies. They just come up with something midway through the year. And our association has actually done a letter to Lagos State where we are asking that we need specific guidelines of what is required for the courier company and their dispatch riders to run on the road.
We'd like to thank you.
And we're waiting for that, for the guidelines. So once that is done, we will know for sure that, yes, when anybody accosts you on the road, you can say to them, these are the guidelines. Please go through my documents. Tell me if there's any that is missing.
All right, thank you. Vice President of the Association of Nigeria Courier Operators, Jumoke Imaswe. Thank you for coming on Business Morning.
Thank you. Do have a wonderful day.
Our commodities market update is up next when we return in just a moment. Please stay with us. Welcome back. Research analyst at the financial derivatives company Nosike Nwajiri joins me now to discuss the latest burning economic issues at the domestic commodities market. Good morning, Nosike. Thanks for coming on the program.
Good morning. Thanks for having me.
Well, let's begin our conversation with oil prices. Of course, positive economic data from Europe, Asia, and the US have driven up prices, even though investors still remain concerned about the rising COVID-19 cases, of course, which could threaten supply, and as OPEC also begins to lift supply cuts. Tell us what other factors are driving the price movement at this time.
Basically, those are the major factors. It's important to know that at this time, OPEC is basically cutting back on output curbs that have been in place for several months. Basically, we want to go from 9.7 million to about 7.7 million, and this is coming at a time where there's a resurgence in coronavirus cases. So the market is a bit let's sit back and watch for a minute. Let's see how this plays out, because I mean, if the coronavirus cases keep increasing, especially in the advanced countries, the biggest consumers of oil like the US, Europe, even in China, there's been efforts by the governments to, through increased liquidity, increased government intervention, and not bailouts, but trying to measures to boost the economic recovery and cushion the negative effects of COVID-19. There's been increased liquidity, so the market is just laying back and saying, okay, there's a lot of money in the hands of people, especially in the US, and they could increase demand, so to speak. But then again, if there's a resurgence in coronavirus cases, there've been lockdowns new lockdowns in several cities in the US. That would weigh majorly on the demand for oil in the coming months, and you could see prices tank to where they were a couple of months ago, and we wouldn't want that. That would be less than $30 a barrel. Nigeria is more sensitive to cuts in production than to cuts in price. So at a time where we've seen prices increase to currently about 44, Nigeria's oil production has in compliance with OPEC plus agreed cuts. It's gone from about 1.59 at the end of May to 1.5 at the end of June, and should even fall further, even when other OPEC members are, rolling back the cuts. So, I mean, it's good for oil prices in general. The OPEC as a cartel have seen that, okay, at this point in time, we were not necessarily fighting for market share with the shale producers in the US, so we can roll back on these cuts and get back as much market share before oil prices rise to above $50 a barrel, where those shale producers are competitive, so to speak.
Perhaps once again, this reiterates the need for the Nigerian government to urgently reduce its reliance on oil revenue. Of course, we'll continue to see a steady decline in the external reserves.
Yes, the external reserves, obviously, oil proceeds are the number one contributor to why the external reserves have been on the decline. There's also the capital outflows at this time, where there's a lot of uncertainty as regards the naira. A lot of capital outflows. There's investors are there's a lot of liquidity. There's a global surge in liquidity at this time. Investors are looking for they are less risk averse at this time, but even at that, Nigerian stocks, because of the issues surrounding the naira, are a no-go area for many of them. There's also dwindling remittances. Until the global economy fully recovers, we won't see a rise in remittance inflows, which are basically our second largest source of foreign exchange at this time, after oil. So, I mean, if oil proceeds are not looking good at the moment, remittances are down, capital inflows have dwindled to levels not seen in quite some time, we expect the reserves to even fall further in the coming weeks. And obviously, there'll be the impact on the currency as well. We saw a rise in a marginal increase, a marginal strengthening of the naira yesterday, but that is only because the CBN has taken steps to through CRR debits, reduce the amount of liquidity in circulation. I mean, banks. You want banks to lend at this time. There's this LDR ratio that's in place to ensure that they lend, but there's this heightened credit risk at this time. But the CBN is doing. I mean, if you can't lend, it means that there's this money supply that just liquidity that's lying in the banks, really, and that means that there's more money to speculate with, and there could be increased forex demand. So the CBN is doing all they can to curtail that, and massive CRR debits at this time, and we've seen the Naira respond positively.
And are we likely to see the Naira stabilize at this current rate for some time?
That remains to be seen. If it's always, it has to do what's the outlook for oil, how the CRL debits. I mean, what's the outlook for liquidity? Are we as the FAC? This is the start of the month. They will soon share another round of FAC allocation would flow into the system. We'll see, and with the second devaluation we've had. The first devaluation was sometime around March. This was the last one was in late June, early July. So we'll see an even higher FAC inflow this by the time the next FAC revenues come, and that will be increased liquidity, and might see increased speculation. And there's even pent-up demand, estimated about 5 billion naira. So the pressure at this time, there's a lot of volatility with the currency, and there's this backlog of demand. So I don't see Naira appreciating much in the coming weeks.
All right, Nosike, one other topical issue, of course, that you're aware of that has dominated headlines since yesterday is that ShopRite is contemplating its future in Nigeria. Of course, we've had several interpretations to the statement that was released yesterday by the group. But tell us, what's the true picture and the possible implications?
I think it remains uncertain. I mean, there was news in international media that even the parent company in South Africa, the share prices rose in response to news that it's planning to divest from its Nigerian operations. Obviously, that would mean that the market perceives the Nigerian operations as a major drag on the value of the stock or the performance, so to speak. But there's been South African businesses in the past that have left the Nigerian retail space. Recently, just a couple of months ago, it was Mr. Price. It was Woolworths, as I think 2013, and Truworths 2016 in the past. So we've seen this when there's a difficult business environment, you have to contend with forex rationing. I mean, as a retailer, you need to get your goods. You need to first of all get forex to buy your goods. You need to get your goods from the ports to your shelves, which is at this moment there's some major constraints about that. You need to be able to repatriate your profits. Over the period of the lockdown, there were issues surrounding supply chain disruptions. So there's a difficult operating environment. There's also the shrinking middle class. There's falling consumer demand, if you will. So all those factors come into play, and the outlook is not looking very good. So it's looking to sell off its Nigerian assets and leave while it can. So I mean, if given all the factors, considering all the factors, any investor, and we've had 2 devaluations in the past 4 months. So I mean, even if you get forex to repatriate your profits, you might be making a loss. Your profits might just automatically become a loss because of exchange rate devaluation. So when you consider all these factors, you can't really blame any investor who's been here for about 15 years. They have about 25 stores nationwide. I mean, everyone thought that you'd be looking to stay for much longer and grow their footprint in Africa's biggest market. They have about 2,000 stores across the continent. So it's, like I said, it remains to be seen. We're seeing claims and counterclaims and rumors and publications countering those rumors. So it remains to be seen. But all in all, as it stands, you can't really blame any investor given the current climate for seeking to cut his losses.
But what difference would it make even if a Nigerian investor buys into the business? Because some of these challenges that you mentioned are there anyway.
Okay, so the issues surrounding forex and repatriation of profits, that would no longer be an issue. There will probably be increased partnerships with Nigerian suppliers as opposed to overseas suppliers. So I mean that in itself saves a lot. Forex saves and it'd be nice to save the jobs. Given the current climate, you don't want more people joining the unemployment market. So it'd be nice to see Nigerian investors come and take up the mantle from where ShopRite leave it, and hopefully the issues surrounding consumer demand, it's a shrinking middle class, probably that will weigh on demand. So they might actually seek to reduce the size of their operations. All in all, we hope they maintain the jobs and all. But I mean, a Nigerian operator coming to take up from where ShopRite leaves, I think it's good in the medium to long term. It's good for the Nigerian economy as a whole.
All right, now let's talk about commodity prices. Now, where are we in terms of price movement, especially after the Eid festivities just passed?
Okay. Now, typically at this time of the year where there's Eid festivities, so typically during Easter or Christmas or any of these Muslim holidays, before that holidays, they build up the market. In the markets, the sellers buy a lot of stock, hoping to sell, and there's increased prices around that time. But we didn't see that during this period. There was subdued demand. Basically, the issues surrounding consumer demand, shrinking middle class, incomes are falling, a lot of people out of work, so demand just wasn't there. So you had that last week. Now this week, those buyers who stocked up on inventory, there will be a post-Eid sell-off, so to speak. So going to sell off as much as they can, and we should see prices fall as a result. And also, there is typically at the harvest season, there's harvest season for yam, New Yam Festival, and cassava in the coming weeks. So that should also bring prices, the expected prices to fall lower in the coming weeks.
And what about cocoa prices? They've risen up to $2,400 per metric ton at the international market.
That's driven by rising global demand. For Nigeria, Nigeria produced about 280,000 metric tons last year, earning about somewhere about $700 million. It's our top agri export. And right now there's issues surrounding excessive rainfall. Excessive rainfall, there's a disease associated with excessive moisture in cocoa. When moisture levels rise to about 12 to 15%, as they currently are because of the excessive rainfall, there's this disease, there's a certain disease, the name escapes me now, and typically optimal moisture levels are about 7.5%. Well, now we have moisture levels that are twice that amount. So that disease is lowering quality and good quantity of output. Output is down already about 10 to 12%. How do you overcome this? You overcome it by the use of fungicides, but these are largely expensive, and the cocoa farming is done by small farm holders, and these are guys who don't really have the funds to be going out to get fungicides. So we might see cocoa production fall by as much as 40% this year, so it's a major risk. All
right, just before you go, Nosike, tell us what you think about the latest PMI data released by FBN Quest, which of course shows a 2.04% decline in July.
I think it was expected. At this moment, consumer confidence is subdued, so people are not spending as much as they ordinarily would. I mean, the outlook if you're unemployed, what's the outlook for jobs? If your income has fallen, you would cut back on some of these purchases that you make regularly. So I mean, it was expected. New orders are probably flat. All the sub indices were mostly flat, and the rest were on the downward trend. So it's something we expect to see in the coming months, probably get even worse, given the FX shortages, given that we have forex shortages at the moment, and the IEFX window, the CBN has not supplied that market for about 4 months. So FX shortages should begin to impact the manufacturers, and we'll probably see the FBN PMI fall even lower in August.
Research analyst at the FDC, Nosike Nwajide, thanks for coming on the program.
Always my pleasure.
Well, we'll be back in just a moment. Please stay with us. Welcome back. Well, let's just do a quick recap of activities at the crude oil market. Of course, prices were down today amid concerns that recovery in fuel demand could stall as a fresh wave of COVID-19 infections around the world sparks tighter lockdowns just as major producers ramp up output. Brent crude futures were down 0.8% to $43.78 a barrel, while US WTI crude futures were also down 0.7% at $40.71 a barrel in early trade. Now, the slide comes after WTI rose 1.8% and Brent climbed 1.5% on Monday, and that was driven by better than expected data on manufacturing activity in Asia, in Europe, and the United States, which showed that factories were emerging from the worst of the early coronavirus pandemic impact. And denting fuel demand, of course, we have cities from Manila to Melbourne, which are tightening lockdowns to battle new infections, while Norway has stopped cruise ship traffic in the latest European travel alarm. Of course, we continue to track the developments in the crude oil space and will continue to bring you updates as they come. Well, now let's get a review of Monday's trading activities at the Nigerian equities markets with Eddie Diong Iwan. Good morning, Eddie.
Good morning, BC. Well, it seems like the market picked up from where it left off last week as the positive sentiment continued at the beginning of the week due to gains from Bois Cement, GT Bank and Flour Mills. The all-share index rose 0.29% to 24,766.12 points. Now, that moderated the year-to-date losses to minus 7.7%. We're also nearing the 13 trillion naira mark as the equity cap was higher at 12.919 trillion naira. The total volume of trades increased by 83.6% to 186.48 million units valued at 1.30 billion naira. And all of that changed hands in over 4,718 deals. Transcorp was the most traded stock by volume at 23.39 million units, while GT Bank was the most traded stock by value at 411.61 million naira. The sectoral performance was broadly positive yesterday. Banking was up, consumer goods was up, industrial goods was up, and oil and gas was also up, apart from insurance sector, which declined 2.35%. But we have Mohammed Kayode, the head securities dealing at APT Securities and Funds, on the phone to talk more about the equities market. Good morning, Mr. Kayode. Thank you for joining us on the program.
Good morning, Eddie.
It's a positive start to the new week and the month. Could this be the beginning of a possible bull market?
Hello?
Hello, Mr. Kayode, can you hear me?
Yes, I can hear you now.
Okay, I said it's a positive start to the new month and the week. Could this be a possible bull market ahead, like a beginning of a possible bull market?
Not really, but what we expressed in the market yesterday was as a result of Bois Cement gaining that, because of the result that was released by Bois Cement. So what I mean by that, the reason why I said it's not going to be like the bullish has returned is that we're still waiting for some of the results. The results you are seeing now is more encouraging now, and it makes those that are contributing much into the market now are retail investors. So they are reacting to the results now. Though everybody was expecting that we are going to see a very bad result, now that the results are coming in a very moderate performance, so people are reacting positively to it. But it is not. That does not mean that we are going to continue to have the bullish run until when we see the foreign investor coming fully back to the market.
So do you have any idea what led to the declines on the insurance counter yesterday?
Yes, insurance companies, the reason why they decline is that if you look at about 5 top gainers, we have 3 insurance companies inside those top losers yesterday. We had AICO, we had Sunu Insurance, and we have investment and consultant insurance also that were among the top losers yesterday. So this insurance sector is not that active. Whenever you see 1 or 2 companies having loss in this sector, you see that the sector will be greatly affected. And that's what gives rise to that. And if you look at the results being dished out in this sector, it's not that encouraging. They are not that good as they are badly affected by the issue of COVID-19. You know, there was no commercial activities during that period. So financing activities is also affected, and that makes this the insurance company to have lower revenue, and also the bottom line also was affected. So investors in this sector are reacting to the negative results in that sector, and that is why we have 3 insurance companies was among the 5 top users yesterday in the market.
All right, Mr. Kayode, thank you for coming on the program. Mohammed Kayode is the head securities dealing at APT Securities and Funds. We'll have to keep you there for a moment. Over to you, BC.
All right, Adidjong, we'll hope that the market continues the bullish run at the end of today's trading. Stick around, Adidjong. We'll be coming back to you shortly. Plus, we'll do an opening call to London in just a moment. Please stay with us. Let's cross over to our London studio where Juliana Olayinka will be discussing the latest business headlines in the UK. Good morning, Juliana. Energy giant BP has reported a significant loss for the second quarter after downgrading the value of some of its assets on expectations of lower commodity prices. But the company was able to pay dividend. How is BP's results being digested by shareholders?
Good morning, Bissy. Well, it's been a pretty good and a bad day for BP. £5.1 billion loss in Q2 is a staggering amount, but their shares were much higher this morning. They opened up at early trading by shares rising by 7.1%. And really, it's because I believe shareholders think that finally BP are heading in the right direction. They no longer want to be seen as an oil major, but really want to transform itself into an oil company that takes advantage of renewable energy and starts cleaning up what is really quite a dirty business. If you compare the £5.1 billion loss this Q2 to what it was last year, they made profits of about £3.1 billion. So you can see just how much the industry has changed in 12 months. Of course, it's not just because of the low oil prices. It's got a lot to do with COVID and the fact that the world has been in lockdown, which means planes haven't flown. And of course, a lot of the fuel does come from BP. Bernard Looney, the new chief exec who came in earlier this year, did say that by 2050 they do want BP to change their image, and that's exactly what they're trying to do. They did cut their dividends. They didn't in Q1, even though they were advised to do so. They did cut their dividends by half in Q2. Told you shareholders appear to have reacted positively to this. And I suppose dividends and how much you're paying out, especially considering your company is in so much debt, is a rising conversation, not just in the oil majors, but also in the big banks. The big banks at the moment have been advised by the Bank of England not to pay out to shareholders when the world is in an economic crisis. And that appears to be exactly the way BP want to go. They haven't done this in 10 years, and this is the first time they've been doing it. But is paying out large dividends sustainable in the future? They did release a statement, and in it they said BP today introduces a new strategy that will reshape its business as it pivots from being an international oil company focused on producing resources to an integrated energy company focused on delivering solutions for customers. So even though that £5.1 billion loss is an eye-watering sum, it's cheered the shareholders by saying they want to diverse exactly their strategy going forward, which is why their shares rose by over 7% this morning. One of the big leaders on the FTSE all-share.
Now, another company feeling the heat at this time is DW Sports, which is a gym and sports retailer, and has said that it will enter administration, putting 1,700 jobs at risk. How much of attention was given to gym operators by the government in this COVID-19 era?
Well, it's they were given the same attention as most businesses here in Britain. Some would say too much, some would say not enough. And of course, we've seen with the thousands upon thousands of redundancies that are coming out of this country that for some people it's too late. DW are one of them. I've got to say, Bissy, we did have some breaking news actually just before I came into the studio, and that's about Pizza Express, which I believe I've discussed on this channel before. They are pretty popular pizza restaurant chain here in the UK. They've just said that they'll be closing about 40% of their stores, affecting 1,100 jobs. And so far, a lot of economists are saying that about 150,000 redundancies have happened in Britain. We're expecting there to be potentially up to millions more when the furlough scheme comes to an end in October. DW, they also own Fitness First, which I would say is probably a more popular arm of their company. They said that this shutdown or this administration for DW Sports won't affect Fitness First, but the 73 gyms and the 75 shops that DW have across the UK will be closing. They said that they are going to try and put those jobs in other places. But as you said, 1,700 positions could be lost. And again, this is not an isolated incident. We saw this last week. I believe Selfridges said they were cutting 400 jobs. Byron Burgers, a popular burger chain, said they're cutting 600 jobs. We've just had it this morning about Pizza Express potentially cutting 1,100 jobs. So yes, it isn't an isolated incident, even with the government's schemes of trying to, pay employers' wages, trying to give people rent holidays, trying to freeze the rates. For some companies, it's just not enough. The fact that they've been locked down and haven't been earning for 3 months, they're considering whether or not a bounce back is going to be profitable. And for DW, yesterday, they announced that it just wasn't for them.
All right, tell us, what's the latest on the plan by TikTok owner to base the app's headquarters in the UK?
Well, this discussion has actually been going on for quite some time now, a couple of months. TikTok, owned by ByteDance, a really popular app. I'm not on it. I know a lot of people are. I just cannot get how to use the app. But, they've had billions of downloads. In fact, their popularity has increased during the lockdown because people like to relax and have fun. But they're caught up in a row, which has really come from Huawei. ByteDance is a Chinese-based firm, but they have said, and they've refuted allegations that they have any direct correlation with the Beijing government. Donald Trump doesn't appear to believe that is the case. He did actually say to press a couple of days ago that he is going to enact special powers to ban the app from America, which does bring this discussion about whether or not TikTok can be based in Britain into a storm, because we know that it appeared on the surface that British Prime Minister Boris Johnson did side with America when it comes to the Huawei row. Will they do it when it comes to the ByteDance row? I don't think so. According to sources, Boris Johnson has given the green light for TikTok to be based here. Apparently, we are going to hear something over the next couple of days. But ByteDance, TikTok, they have tried their best to say that they have nothing to do with the Beijing government, and they're not selling data or passing on data to China. They did even a couple of months ago bring in one of the big, powerful Disney execs to run the company. That hasn't worked. There has been speculation that Microsoft may be interested in buying the American franchise of TikTok to appease Disney. Yes, so that's the situation. That's what's going on.
All right, Juliana, thank you. We'll see you again in the afternoon. Let's just get back to Edidion to do a quick review of the debt and currencies market.
Thank you, BC. The bond market started on a positive note yesterday as yields declined by 20 basis points. We saw 25 deals worth 7 billion naira. There was a little bit of activity at the Nigerian Treasury bills market, although minimal. We had just 3 deals worth 165 million naira. At the OMO market, we saw 39 deals worth 65.43 billion naira. But to talk quickly about the FX market is Ajibola Aero Phillips, the head FX trading at FBN Quest Merchants Bank. Good morning, Ajibola. Thank you for joining us on the program.
Yeah, good morning. Thanks for having me.
Very quickly, we'd just like to find out how the volume has been at the I&E window.
Disappointing, to say the least. The market has been really, really liquid. There's so much that has happened. It didn't help that we had just 3 days of trading last week. This week, we started pretty much where we left off last week. The volume still quite low. I think the total volume that went through yesterday was less than 20 million, which is far from, signs that an active market in itself. Market's still trading around the 380 on the low and then 390, 391 on the high. That's pretty much sums up what the FX market is currently right now.
All right, Ajibola, thank you. We'll have to keep it there for this moment. Thank you for coming up on the program. Ajibola Aero Phillips is the head FX trading at FBN Quest Merchants Bank. We'll have to leave it here for today. We hope for a profitable trading day. Over to you, BC.
As always, Eddie. And that's why we wrap up today's program. Thank you for watching. I am BC Adebayo.